All right, let's talk about the week ahead because the market is really bracing for a major showdown. You've got geopolitical tensions pulling in one direction and the raw power of corporate earnings kicking into high gear on the other. It's a classic battle, and honestly, the outcome is probably going to set the tone for a while. So let's break it all down. Okay, so the best way to picture what's coming is a giant tug of war for the market. We've got some seriously heavy news from the world of politics pulling sentiment one way, while the fundamental strength of American companies could yank it right back. The big question is, which force is going to win out? And what's so interesting is that this is all happening after a ridiculously quiet end to last week. The S&P 500 closed Friday down just 0.06%. I mean, that's basically a flat line, the definition of the calm before the storm. But that calm, yeah, it's been completely shattered. As we look ahead to Tuesday's open, futures are painting a totally different picture. All the major indexes are pointing sharply lower, with the tech-heavy Nasdaq leading the pack, down over 1%. That sets a very, very cautious tone right out of the gate. So you gotta ask, right? What on earth happened over the long weekend to cause such a dramatic shift in mood? Well, the answer isn't in an economic report, it's in geopolitics. It all comes down to this: tariff turbulence. Some news broke over the weekend that has sent this huge ripple of uncertainty across global markets, and investors are doing exactly what you'd expect them to do. They're getting cautious. And here's where things get, well, pretty unusual. President Trump has laid out a plan to hit 8 European countries with new tariffs. And we're talking the big players here: Germany, France, the UK. But here's the condition: they have to support a U.S. effort to acquire Greenland. It's a unique demand, to say the least, tied to a very significant economic threat. And look, the reason the market is taking this so seriously is the timeline. This isn't some far-off, abstract idea. It has very real, very close deadlines. A 10% tariff could be slapped on as soon as February 1st, and then it could jump to a much more painful 25% by June. Those deadlines are what's forcing investors to pay attention right now. And in response, we're seeing the market run its classic playbook. When uncertainty spikes like this, money just flows out of what we call risk assets, like stocks. That's why futures are down, and it flows right into traditional safe havens, like gold. It is a textbook flight to safety. And just how significant is this move to safety? Well, just look at gold. It has absolutely surged, hitting a new record high, closing near $4,600 an ounce. That is not a small move. It's a huge, flashing signal that investors are actively looking for shelter from this geopolitical storm. But remember that tug of war? That's only one side of the rope. Pulling hard in the other direction is the power of corporate America. And this is where the whole story gets really interesting. Just as fear is taking hold, earnings season is ramping up, and strong company performance could be a powerful antidote to all this anxiety. And we've got some absolute giants reporting this week. Netflix is up on Tuesday, and the options market is pricing in a potential 7 to 8% swing in the stock. Then you've got Johnson & Johnson on Wednesday, and the big one, chipmaker Intel on Thursday, with an even bigger 9 to 10% move expected. These reports are going to give us a fantastic real-time look at the health of both the consumer and the tech sector. And it's not just about corporate earnings either. We've got some really important economic data coming out, including key inflation and GDP numbers. On top of all that, President Trump is scheduled to speak at Davos, and you just never know what kind of policy bombshells or market-moving comments could come out of that. You know, it's so important to remember that underneath all this short-term noise, there's still a ton of long-term optimism floating around. Some analysts believe that the fundamental strength we're seeing in key areas like artificial intelligence could be powerful enough to push the market way higher by the end of the year, despite these current headwinds. So, it all boils down to this, really. The entire story for the market this week is this one single conflict. Are the fears created by global politics and these tariff threats going to be strong enough to overshadow what could be a really solid showing from corporate America? So that's the billion-dollar question for the week, isn't it? In this massive market tug of war, will the fundamental strength of corporate earnings be enough to overcome the heavy weight of geopolitical fear? The next few days are going to give us the answer. It's sure to be a volatile ride. Thanks for joining.